I personally think the most surprising one was the pandemic 2020, right? And it seemed to do pretty good on that one.
It did very well in 2020, did very well in
Yeah, and
2022, and did
yeah,
very well in the tariffs of early 25.
yep. So I'm impressed. I'm very impressed.
Yeah, same. Okay. Well, let's flip this back. Switch back to using TQQQ and run a back test from how far back do our numbers go? I think 2013 is about as far back as we can go. That'll give us like the longest back test that we could run with this. Switch to data. Actually, no, BotSpot auto. I mean, I'm impressed by the strategy. I think it's actually really good. What I would like to do is I would like to actually take this indicator and try trading a bunch of other stuff with it. That's what I'm thinking. What do you guys
Yeah,
think?
it's not doing bad at all.
Yeah.
Yeah,
Yeah.
I'm
'Cause
gonna try to integrate it into the poor man's covered call.
yeah, maybe.
I'm gonna
Yeah.
try to do that.
Yeah, that'd be interesting.
Yeah, I'll see how it does. I'll let you guys know how it does, but I'll definitely do that.
Yeah, so what we could do, okay, so we have all these other indicators here. This one, okay, the RSI, the double thing, actually it's not doing too bad now. Actually, no, sorry. I take that back. 72% drawdown is not very good. I say we probably nix this one. Take it out back and shoot it, as you said. Let's close this. Let's close these. And then this one is the super trend. Surprisingly not doing that well. The super trend looks so good on TradingView, but it doesn't actually seem to perform that well. So I would probably stop work on this one too. What do you guys think? Right, here's our 200-day moving average, classic. Is our Bitcoin still stuck? I need to figure out what's going on there. Earnings beat buyer. This is one I had open before. Close that. This is, what is this? MES. Yeah, this is where I was testing futures. So yeah, so TQQQ Smart Money Concepts. There's the back test going again from 2013. Yeah, this is doing very well. 5 years in, it's already up 300%. I mean, I wouldn't mind throwing some money at this, to be quite honest with you. I think I've seen enough evidence to throw some money into this.
Yeah, it's not bad for just one stock symbol.
You know what I mean? Like, I
Yeah, it's not
already
bad at
trade
all.
this symbol quite often. This
Yeah,
seems to be a better indicator for it.
yeah, it's actually doing pretty well.
Yeah, look at this.
Dang,
It turned a
I know.
hundred grand into $6 million, 7 million,
Dang,
eight
it's not
million.
done yet.
Like, what the hell?
Dang,
This is
How many
ridiculous.
years is this?
10 years.
This
From
is since 2013. So it's what?
oh,
13
10 years.
years.
Yeah.
13
Dang,
years. A
13
hundred
years.
grand into
Wow.
8 million.
damn.
But look at the inflection at in 20 for right there. Yeah.
Yeah, that makes sense. Yeah,
Yeah.
this is basically inflation fueled.
Huh.
Yeah, look at that. 40% annual return, 30% drawdown, 8,000% total return.
Dang.
This is incredible. Like, who the hell wouldn't want this? You know?
Is this just the 200-day
But
moving average?
No, this is smart money concepts.
Oh, the smart money
but the
one.
200 200 moving day average did 9,000%, didn't it?
It also did very well, right? If
Yeah.
I give it the same time period, right,
Yeah.
I'll tell it to do the exact same thing. I'll tell it
Yeah. I like to see that.
back test this. Where's
You
I want to tell it the exact same thing that I told this one, just so that they're
know,
lined up.
there must be a leveraged as SPY, right? And Russell. No, it's
Yeah,
not.
the SPY is U Pro is what it is. UPRO.
Yeah.
But TQQQ does better long term, right?
Oh,
So if you look at, let's compare them. So TQQQ, right? And then compare to U Pro, and then do this over 5 years. Why is this?
did it only just start there?
Oh no, it's doing the wrong. It's doing TSX TQQ, and that's not what I wanted. There, this is the right one. Okay, and then compare that to U Pro. Yeah, this is over a shorter time period, right? NASDAQ is winning, right? You
Oh,
go over a longer time period. I don't know if they start at the same time. These are zero. It's a little bit unfair because one started earlier than the other.
yeah.
But even the one that started earlier, U Pro started earlier and it had a leg up. It started already 85% up, 50% up, something like that. And then TQQ came in and just still killed it. More than double
Oh.
the return. Yes. 22,000% return over its
Yeah,
lifetime.
but the point is, what's the, run it on the leveraged QQQ, and then I mean if the draw, if the Sharpe is better, then you just leverage it more, right?
Well, that's the thing. How do you leverage it more, right? Because I agree with you. I would like to leverage this more, right?
Yeah.
But how do you do that? I mean, we could do it with options. We could do it with futures,
Yeah.
right?
Yeah, I mean that's what you have to do.
Yeah, I think so. So, I mean, the ratio is very good, right? We're getting some pretty impressive results here. 40% annual return, 8,000% total return. It's crazy. This is very good. So this is also why I don't always believe in Sharpe ratio, by the way. I know, Mark, you're big into Sharpe ratio, and
Well,
deservedly so. A lot of people talk about Sharpe ratio, but I mean, the Sharpe is only 1.2, but the returns are 42% a year, right? Like I'd rather listen to this, right?
yeah. And the disadvantage of the Sharpe is that it penalizes you for being too good also. It's not just the downward, which I think isn't this, I think the
Sortino is
Sortino,
supposed to get around that. Yeah.
yeah, Sortino only does um, yeah,
Yeah. Sortino's a little bit less biased in that regard, right?
right.
But I mean, my favorite, and I actually stuck it in here. Not a lot of people talk about it, but I love using ROMAD, right? This is my favorite.
Yeah, yeah,
Return divided by max drawdown. So your annual return divided by your max drawdown. That's my favorite ratio personally. Yeah.
right. And then another one that you have in there is Omega. And the reason I like Omega is because a lot of my options strategies are, if you look at the distribution of the returns, they're kind of bimodal and they're non-Gaussian. And so, when it's really bimodal, it's like doesn't mean anything. Sharpe ratio doesn't mean anything. So,
Yeah.
but Omega gets around that.